Okay, we're officially live. Swinging Bull here with PB Alerts. Welcome to another one of my earnings streams. I do every Tuesday, Wednesday, Thursday at 4 p.m. Eastern. Don't really have too much of a popular company today that we're going over, but it's ticker symbol HWC. I'm going to keep SPY over here on the right because we just had a little down move regarding geopolitical issues with China, kind of off the heels of the tariff news that broke last Friday, and also regarding that tariff news that Trump was talking about last Friday. There's some research websites that are saying it's only 11% chance Trump imposes the full tariffs on China. So just going to see a lot of back and forth with that until it gets resolved. Let me go back here. Let me see. Okay. All right, what's going on? Just my buddy Jose in here for the earnings stream. And we got a bunch of people on X and YouTube and Twitch, and we're also streaming on Kick. But so, anyways, the stock reporting earnings here today is Hancock Whitney Corporation, ticker symbol HWC. So let's just look at a few things on that real quick, and then we'll jump right in and we'll get going. So we click on this. Okay, yeah, they're supposed to report right at 4 p.m. Eastern, so their data should be out. Their forecast EPS is $1.41, and the forecast revenue is $387 million. And quick glance at their annual chart. Got the anchored VWAP right around, I'd probably call that like $62. So they were trading above that today. And looks like okay, there is a little volatility going on right now with HWC. It kind of wicked down, then it wicked all the way up to 63.50, and now it's back down to just above where it closed the regular session at. So they closed the regular session at $62.53, up 3.37% on the day. As far as the ETFs that follow the indexes, or just the indexes in general, S&P, after that little flush down this afternoon, they actually ended the day red, negative 0.16%. NASDAQ down 0.69%. The Dow still nice and green, up 0.44%. Obviously, industrial heavy index there. VIX still around a little above 20. 10-year yield down. The dollar was down. Overall, it was a nice trending up day outside of pre-market where we gapped down. The China tariff stuff was escalating a little bit. But then Powell spoke around lunchtime and hinted that there's not going to be much QT needed for the rest of the remainder of the year, which is definitely good for stocks. So I think that contributed to the second leg up today when Powell was talking around lunchtime. Let's go back to HWC. We'll just kind of go over them real quick, see what kind of condition the company was in going into the earnings. Nice and positive PE ratio, trailing 12-month 11.54, and EPS nice and positive 5.42. They do pay a 2.8% dividend according to Webull. Let's see how often they pay that. They paid the last ex-div date, if you will, was September 5th, so about 5 weeks ago, and then they paid one in June. And then March, yeah. So they pay a quarterly dividend, 2.8%. And let's take a look at the financials real quick. Income statement, they are a nice and profitable company. 5 quarters in a row, positive net income. So that's good there. Balance sheet, debt to asset, 87%. And trending down. So that's good. They're below 100%. That's fine. Cash and equivalents. They got a ton of cash and equivalents. Let me take a look here at the annual view, quarterly. Actually, cash and due from banks, 512 million. Just so everyone knows, HWC, they are located in the United States. They're in the banking services. Okay, it's a bank holding company. And they provide comprehensive financial services. Okay. And let's go here. They have monthly options. Doesn't look like there's much volume or open interest on this. So not really a lot of interest in options on this stock. Yeah, I'm going out to November 21st, 38 days away. There's just really nothing there. So more of like an equity type stock is what I would look at it. Let's see. Their data should be out. Let me double check over here on the right. And then if this ends up being like a non-reaction and not a lot of action, I'll probably just jump into some of my open positions that I have right now. I'm sure everyone would be interested to see what I've been trading. So I'll share my Fidelity account with everyone here in a little bit. We can go through those positions and give everyone an update on how they're doing. And HWC reported EPS of $1.49. So that's they did beat the forecast EPS. So they beat EPS. Looks like they missed revenue. Okay, so that's not good. Revenue was up 5.6% year over year, but they did miss the forecast. The forecast revenue. Let me go back one screen here. Hold on one second. I'm going to post this on the bottom of my screen. If anyone's interested in the data, I'll post the EPS stuff first. Okay, and EPS was up 12% year over year, so that's good. Go over here to the comments and post this in here. Let's make sure it doesn't get all jumbled up. That's good. There we go. So they beat the EPS. Let me go to their investor relations page. I'll go back to the sticks real quick. I got HWC on the left. I'll keep SPY on the right. And for everyone that didn't know what that afternoon selling was all about, I'll let everyone know right now. It was here. I'll just move this over. Hold on one second. This is what it was. This was the afternoon little flush down we saw. U.S.-China trade war escalates to geopolitical crisis. That doesn't sound good. Let me pull up the actual news article here. Okay, Trump says China not buying U.S. soybeans. Economically hostile act is what they're calling it. Yeah, this U.S.-China thing, it's far from over. Let's read the news article though, so I can just let everyone know what happened. Okay, this is from Seeking Alpha. China is escalating not only the trade war, but also the geopolitical situation by banning exports of rare earths for military use, which affects the U.S. Army and NATO. China is also tightening the exports of rare earths for AI use with case-by-case approvals. The threat of additional 100% tariffs on China is unlikely to change the Chinese new rare earths exports policy. Thus, as November 1st approaches, the markets will be increasingly volatile. Keep that in mind over the next 2 weeks. As that November 1st date approaches, expect more volatility. And the recent sell-off in the S&P 500 is likely only the beginning of a deeper drawdown. Perhaps. We don't know for sure. All right. And last Friday's dip, everyone by now should know what that is, what that was from. And basically it was President Trump threatened to impose additional 100% tariffs on China. AI trade is still strong. Investors continue to cheer each new deal, despite the circular spending and vendor financing red flag. Expect President Trump to soften his tone with respect to China, which he did on Sunday, I believe. And then that's why we saw a nice green day yesterday. And that ultimately negotiations would continue. And exactly what I said on Sunday, he assured that all will be fine with China. All right. Tough negotiations ahead. This is good. I'm going through this just so everyone has a clear understanding of what's going on here. Okay. All right. So President Trump is known as a superb deal maker. In his words, his negotiating tactics involve initially tough negotiations, which ultimately lead to a great deal, even if some of the initially harsh terms are ultimately softened. Market participants got conditioned to these tactics since Liberation Day, and thus they don't react negatively when Trump escalates negotiations, expecting a reversal. Thus, the market rallied on Monday after President Trump softened his stance on China tariffs. Now the expectation is that the U.S. and China will start negotiating, and ultimately no additional tariffs will be imposed on China on November 1st. So if they can make a deal before November 1st, then there's not going to be any additional tariffs imposed, if you will. So, however, the situation is more complex now. Specifically, the recent trade war escalation was caused by China and not by Trump. And Trump only reacted to Chinese escalation. Thus, it is China who needs to de-escalate first. Trump's threat of additional 100% tariffs on China are supposed to force China to de-escalate. But Trump cannot walk back the threat until China really de-escalates. Okay, makes sense. Thus, the entire situation depends on whether China views the U.S. threat as sufficiently strong enough to de-escalate the trade war. So what did China do to escalate the trade war? The U.S. imposed high punitive tariffs on China in April. And in retaliation, China banned rare earth material exports to the U.S. Rare earth materials are used in computer chips, various electronics, EVs, and most importantly for military purposes, and various weapons and AI. And China controls 70% of the global rare earth production and possibly 90% of the processing. So that, yes, that is a major problem. The U.S. and China agreed to de-escalate the trade war temporarily, whereby China would allow exports of rare earths to the U.S., while the U.S. would lower tariffs on China until a more permanent trade deal is reached. And on October 9th, which was last Thursday, China surprised everyone and significantly tightened the exports of rare materials, not just for the U.S., but for all countries. That's the geopolitical stuff going on there. So this is not an outright ban. China is toughening control of rare earth material exports. Specifically, effective October 9th, China tightens control of rare earth exports from China, but also effective December 1st, China starts controlling the rare earth exports from foreign countries using machinery and labor from China and materials only from China. So it's a very wide-reaching action. Okay, just want to go over this a little bit so everyone kind of knows what's going on with this U.S.-China trade war. It's basically a trade war now. Okay, let's go back to the sticks here. HWC, still not much going on with HWC. Might end up being kind of, not much of a reaction. We'll see here shortly if it ends up making a move in a direction or not. But Hancock Whitney, this is from FinZ. Hancock Whitney delivered a strong quarter of profitability and capital returns, though balance sheet trends showed some weakness. So that's what you want to keep your eye on. Some of the balance sheet trends showing weakness could be a little bit of a red flag. But the strong beat on earnings was driven by excellent expense control and robust fee income, leading to an improved efficiency ratio and a remarkable 1.46% return on assets. Go back to TradingView for a second. Here's HWC on the left here, trading at $62.30 in after hours. Some more highlights here from the earnings. The bank continued its shareholder-friendly capital return policy. The bears case is they'll point towards the slowing loan growth, down to 2% annualized from 6% last quarter, and the notable deposit outflow. So just some things to keep your eye on about Hancock Whitney Corporation, HWC. So they had a notable deposit outflow, which was not good for the banks. And also particularly in valuable non-interest-bearing accounts. Overall, the bull case, it's a high profitable and efficient bank returning capital is more compelling, but the moderation in balance sheet growth warrants attention. So again, ticker symbol HWC, not really doing anything in after hours right now. Their earnings data is out, but it's just not moving. Average volume over 30 days for the stock, about 850,000 volume. Today they had 1.19 million volume so far. So a little bit more than their average volume, but not by a lot. It wasn't like it was like double the volume or anything like that. A couple positive highlights from HWC's earnings. Strong capital returns. The bank continues to build capital while actively returning it to shareholders. That's what we were saying earlier. They do pay a dividend. And after repurchasing 662,000 shares during the quarter, provides significant flexibility. Some drivers, stable net interest margin. So the NIM, which is the net interest margin, held flat at 3.49% despite a falling rate environment. That's good. This stability is a significant positive achieved through higher securities yields and a better earning asset mix, which offset pressure from borrowing costs. Those in the banking industry know what I'm talking about. Couple other drivers of their earnings growth. Broad-based fee income growth. So non-interest income was a standout, growing 8% linked quarter. The growth was well diversified, stemming from higher trust fees and also increased investment in annuity income and higher syndication fees. One last thing about the growth driver, disciplined expense management. So non-interest expenses declined by 3.2 million from the prior quarters. That's good. It's a little green check mark there. Some concerns about their earnings. It's for Hancock Whitney Corporation. Some concerns. Slowing loan growth. We talked about that earlier. Period end loans grew just 2% on an annualized basis. That's a notable deceleration from 6% in Q2. Management attributed this to higher loan payoffs and lower line utilization. While full year guidance is unchanged, so they didn't change the guidance regarding the loan growth, but it's definitely a trend to monitor closely. One of the bigger red flags with their earnings, this is kind of important, is the deposit outflows. Banks don't want to see that. Total deposits fell by 387 million, so 5% on an annualized basis. They fell 5%. That's the total deposits. So that shows a strong deposit outflow, which is definitely a red flag. Also, another bit of a red flag, mixed credit signals. So while the overall picture is stable, with ACL coverage solid at 1.45% and criticized loans declining, non-accrual loans increased by nearly 20%. So they want accrual loans, not non-accrual loans. So that specific deterioration contrasts with the broader improvement and needs clarification. When they do their earnings web call, matter of fact, let's find out when that is. I'm gonna move this over here. Let's see. I'm going to actually let me actually go back a little bit. Hold on one second, y'all. I want to go to their investor relations page. Hold on. Because I want to find out when their earnings web call is and how to get there. Okay, HWC, investor relations. Here we go. Yeah, it's down a little bit. I mean, this is the 5-minute chart, so this little down move here probably looks a bit more dramatic than it actually is. HWC was up 3.3% today. It's down 1.4% in after hours right now. So technically still green on the overall daily picture, just kind of ate into some of the gains it had today. So, I mean, technically, I wouldn't even consider this like a negative move. I mean, of course, it is a red move down 1.4%, but based off of how much it was green for the whole day, I mean, technically, it's still green overall, right? But let's go here. I want to go to their investor relations page. Let's find out when their earnings call is. And then I wanted to talk about some of the key questions, for the earnings call. What are some of the questions investors are going to have during this earnings call? And depending on how upper management answers those questions, maybe it makes a move then. But until then, let's do this. Okay, this is their investor relations page. All right. Okay, so here it is here. Third quarter 2025 earnings conference call. All right. And I'm going to put this, let me see if I can go to make this link smaller. Delete that. Yeah, I suppose we can just copy and paste this first part would be fine. I'll put this link in the comments. And I'll put it on the bottom of my screen too. So give people time to screenshot that. So that link right there, that's how you're going to get to the earnings web call. Okay. And just scroll down. You can see it's at 3:30 p.m. Central time. So what's that going to be? That's going to be 6:30 Eastern. Or I'm sorry, it's going to be 5:30 Eastern. Hold on one second. Okay, no, it's at 4:30 p.m. Eastern. Excuse me, Central Time. I'm over here on the East Coast. So it's about 8 minutes from now. Satan Donkey, funny name, over there on Twitch. Nice for you to come hang out with us. But yeah, appreciate the confirmation. So about 7 or 8 minutes from now is when their actual earnings web call is. And if you want to dig deeper into their actual earnings data, again, you can go to that link on the bottom of my screen. Just scroll down till you'll see the news section, and you can click on that, and then you can read the whole press release, which I've already gone over the majority of this stuff. But let's go over some of the commentary from the CEO. That's usually pretty interesting to see. So his name's John Hairston. He's the president and CEO. He just says the third quarter of 2025 results reflect another quarter of exceptionally strong performance. We saw continued improvement in profitability and progress on our growth plan for 2025. Our ROA was a remarkable 1.46%. I'm assuming that's return on assets. Our efficiency ratio improved to 54%. It's coming down a little bit now. It's trading just above 61 bucks in after hours. But I've already went over most of this. He also says our earnings performance contributed to growth in all of our capital ratios while we continue to deploy capital through organic balance sheet growth and repurchasing 662,500 shares of their common stock. So they obviously have an ongoing stock repurchase program in place. As 2025 draws to a close, we remain committed to executing on their organic growth plan, maintaining operational efficiency and proactively managing capital. It was just a couple things, red flags that we had noticed though on some of their line items, and it was specifically the deposit outflows. Don't like that. The slowing of the loan growth, we don't like that. And mixed credit signals. So I'd say those are the three big things as far as the bear case goes. Their deposit outflows, not good, slowing loan growth, and mixed credit signals. But on the flip side, for bulls, they do have good profitability and efficiency, strong capital returns, and organic growth plan progress. But again, for banks, investors just don't want to see increasing deposit outflows, as their total deposits fell by 387 million. That's 5% on an annualized basis. That the investors don't want to see that. So for the bulls, the earnings web call starts in 4 minutes. Some of the key questions for the earnings call. See if I can get through this before it starts. Loan growth. Basically, question. Since the loan growth slowed, the question investors have: what does the pipeline look for Q4? Right? Investors want to know that. They want to know more detail on the drivers of higher payoffs and lower line utilization. So if the CEO or CFO can have a good answer to that question, I think it should help. Specifically, what's the pipeline look like in Q4? And another question investors probably have for the earnings web call: it's the 387 million in deposit outflows. Question is, how much of that do they expect to be temporary? And what's the strategy to defend and grow core deposits? That's going to be a good question they need to answer. Investors want to know. And if they don't have a good answer, there could be some more selling. Another question investors probably have: non-accrual loans increased by about 19 million, which again, they'd rather see accrual loans increase, not non-accrual. They need to provide more guidance on the specific credits that drove the increase. And does that signal any emerging stress in a particular industry or geography? These are all going to be important questions for when they do this earnings web call. It starts in about 3 minutes. And another question investors will probably have: with the guidance, growth was raised to 5 to 6% for the year. So, what's the primary factor giving them this increased confidence? So they got some tough questions to answer. And more specifically, I think the big red flag is the deposit outflows. Remember when we had that banking crisis 2 years ago? Some of the banks went underwater. It was all because of deposit outflows. People were just taking their money out of the bank. They don't want to do business with them anymore. Banks hate that. And investors of banks hate that. So pretty good overview of some of the tough questions they're going to need to answer at this earnings web call. I think if they can give some really good guidance and answers to these questions, it could probably start coming back up. Right now, it's down a little over $2 a share in after hours. That's what TradingView is showing me. You go to Webull and see what they say. Yeah, same thing. They're down like $2 a share, which, I mean, it's a $60 stock. Being down $2 a share isn't really that big of a deal, but we'll see. Got to order around 57 here, 3,600. Yeah, Satan Donkey, a takeaway from Powell's announcement. Yeah, I mean, the takeaway I had is he basically, in a nutshell, was saying that they're not going to need to do any more QT, if any at all. They're not going to have to do any more QT for the rest of the year, which is bullish on stocks. So that's kind of, what I gathered from it, like in a summary. just enter in this this question over here. So yeah, that's basically what I gathered from Powell's speech. Is he doesn't think there's going to they're going to need any much more, if at all, any more quantitative tightening. And for those that don't know, you know what that is. It's a monetary policy where central bank reduces the size of its balance sheet. Okay, and it's a strategy using mathematical models for trading decisions, basically. But the purpose of it's to curb inflation by decreasing the money supply and making borrowing more expensive. So Powell basically said they're not going to need to do any more of that for the foreseeable future, and that's positive for stocks. And I think that was part of the reason why SPY had that second leg up today. So that second leg up happened like right around when he was speaking, and then and for those just joining the stream. The little afternoon flush down, that was again due to escalation in the U.S.-China trade war, kind of going a little geopolitical, threats on the U.S.-China trade war. I was sharing that with everyone earlier. But yeah, it's for HWC. It looks like the earnings web call just started. I'm not going to stream it. If you're here to join that earnings web call for HWC, I got the link right on the bottom of my screen. That'll take you right to it, okay? But with that said, let me go ahead and close this down here. Let me just go over some of my open positions that I have. I usually try and do that at the end of my streams. Everyone kind of knows what I'm currently trading and stuff like that. I run a lot of the wheel strategy, so selling cash secured puts to get into stock, collecting credit and income while we're doing it. Then once we get assigned, we start selling covered calls, collecting more income and more credit. So let's see how my positions are doing. They're hanging in there pretty well. Got 5 open trades here. Here, I'll just pull this over. This is my Fidelity account. I'll leave HWC's price on the right since people probably want to see that. Let me just zoom in here. So these 5 trades here basically make up 4 different wheel trades I have going on. JetBlue had a lovely move today, back to the $5 area. But I'd opened up these $4.50 cash secured puts on JetBlue not too long ago, and they expired this Friday. Collected $47.41 and $47.41 in credit. I got $10 a contract minus commission. My average is a little over $9 a contract. I did 5 contracts though. That's up 57% here. I'll probably just keep holding that, squeeze as much as I can out of it. All 5 of these positions were seeing drawdown yesterday. Couple $100 in drawdown actually, but that's just kind of part of the game when we're trading the wheel strategy. We see drawdown every now and then, but that's okay. As we approach expiration, and as long as the underlying stock price is above our short strikes, that drawdown starts disappearing and turning into profit. So that's JetBlue trade. I am trading Ford again. Sold a few cash secured puts on that. That's up 15%. I'm going to keep holding that as well. I got 2 trades on Bull. So this is Webull, the trading platform that a lot of people use. Ticker symbol Bull, B-U-L-L. Sold the $11.50 cash secured put. Did 2 of those. Got almost $30 contract on that. Brought in almost $60 of credit. And the $12 cash secured put, just did 1 of those. I brought in another $54. This is like over $200. It's like almost $220 in profit that I should be collecting on Friday, just in another 3 days. And then UMAC, I sold $13 cash secured put on that. I am seeing a little bit of drawdown on that, but it looks like there's just a big spread between the ask and the bid. I got almost $20 a contract on that one. I did 2 lot size. You can see here the bid's at 0.05 and the ask is at 0.30. That's just, I don't even, I just kind of ignore that, because what's the value of an option contract? It's what someone's willing to pay for it. The bid's at 0.05. So even though I'm seeing some drawdown on this UMAC $13 cash secured put, this technically, that drawdown shouldn't even be there. We can pull up UMAC real quick. And yeah, of course, UMAC's trading above $15. So I still got $2 in cushion to my short strike. I'm not even worried about this trade at all. And we, once the spread between the bid and the ask, once the ask comes down closer to the bid, to where what people are willing to pay for it, that drawdown will disappear. But yeah, I totally plan on collecting all this profit on Friday. Just these trades right here, it's around 220 bucks in profit I'll get on Friday. But yeah, so just wanted to share an update on how these positions are doing, and should be a nice little payday for Friday. But also, you know, if you've ever been interested in writing contracts, which is basically we're on the selling side of the opening transaction. There's always 2 sides to a transaction. You know, people that don't have a lot of experience trading, they just think, you know, they buy, and then when the value goes up, they sell. And that's like kind of all they know. Well, there's more ways to trade. You can actually be a seller on the onset of the opening transaction. That's the side of the transaction I like being on. I'm a contract writer by nature. I've been doing it for several years now. And that's what I do in the Discord. I teach everyone how to write contracts. So if you've ever been interested in being a contract writer, you know, you can join the Discord. I go by the Swinging Bull. Let me put my name back up there, the Swinging Bull. Just tag me in the chat. I'll come by and say what's up, and we can chat for a little bit. Okay, HWC down 5% in after hours now. The earnings web call is going on right now. And we went over some of the potential questions investors are going to have. We went over that a little bit ago. There were some tough questions. So, but I'll watch the price, see how it does for the remainder of after hours. But like I said, just wanted to share some of my open positions. Everyone can get a feel of the types of trades that I do and the tickers that I trade. I do trade a lot of spreads. I do trade a lot of blue chip companies using spreads. So if you're interested in trading spreads, maybe you don't know how to trade spreads, join the Discord, tag me in the chat. And if you want to join my coaching group, this is basically all I teach in the Discord, is how to write contracts and how to do spreads, debit spreads, credit spreads, iron condors, inverse iron condors, butterfly trades. We do a lot of diagonal calendar spreads where we're buying puts 3 to 4 months out, and then we're using that longer dated puts as collateral to sell weekly cash secured puts, which basically reduces our buying power needed for the weekly cash secured puts by like 80–90%. So it's a way to decrease the buying power needed to be able to sell weekly cash secured puts on blue chip companies without needing all the capital. Because in essence, we're using the longer dated puts as collateral. I could teach you how to do all that as well. But yeah, that's really all I got for today. Tomorrow should be much more action tomorrow. Tomorrow's earnings, we got United Airlines and JB Hunt Transport. So definitely should be a lot more action tomorrow. That's going to be tomorrow at 4 p.m. Eastern. I'll be back to stream the stock price reaction to United Airlines and JB Hunt. But yeah, with that said, that's really all I got for today. My name's The Swinging Bull with PB Alerts. I do these streams every Tuesday, Wednesday, Thursday. So be sure to check me out tomorrow, and of course another one on Thursday. If you like the content, give me a follow on my X account. There's a link in the description of the stream that'll take you right there. It's basically at swingingbull_1. Take you to my X account. I am running a $2,500 wheel account challenge. And I'm posting all the updates on my X account. So be sure to follow me there and you'll get the updates on that. But yeah, that's all I got for today. My name's The Swinging Bull with PB Alerts. I hope everyone enjoys the rest of their evening. And until next time, I'll see you in the very next stream. Cheers.